Well, so we had a successful day. 1 to 4R. Great trade, technically speaking, over a hold, but the entry was still really good. We saw it. I'm not going to go over this trade too much since we did do it basically all the way through the video. Okay, for the sake of the trade recap, I guess we'll make two videos. So, hello everyone. We just exited our final position on this trade. I'll tell you why. Because I am gonna go eat and I don't want to look at my phone in the car. So I closed right here. Basically, we are up 4R. This was our position. Our entry was right here. I'm gonna be really quick with this because we don't need to spend too much time. This was our target, 127 points, and our risk was right here, 34 points. So coming into the day, like I said, I was expecting that we would move higher. But if we're just looking off of structure, I couldn't really tell because from the 15 minute, from the 1 hour, we weren't really giving us a lot of gaps. So I used this gap as our wick support, which I'm looking for basically price to respect above if we're going to be highly bullish, because what we're doing is we're using our time frame alignment and the gaps to identify our lows, our low swing points in our trend continuation. So by doing that, I was able to not get stopped out on this retrace because what I did initially, let's start from the beginning. 10 a.m. PO3, we all saw it today. Microcycle, decent, no 90 minute. The daily and weekly are both on YM. So valid 10 a.m. long, or valid 90 minute PO3. Our PO3 ended up only going to here though, because I guess we just didn't want to fill the new daily opening gap. So we swept our high, pre-market high. Microcycle true, microcycle open, inversion of this fair value gap, basically a balanced price range by here. We are retapping into it. So an entry in here is valid, targeting this and all-time highs possible, but we ended up targeting all-time highs at 10 a.m. So what I was looking at was as we created this range, this is our 30-minute range from open. And basically, I'm looking for either a continuation lower in the 10 a.m. or a reversal, which we are in our OTE for a reversal to go higher. Technically, this is our continuation, but in low time frame, it is a reversal. So what I was doing from here, basically looking at right when we got to 10 a.m. open, is I'm looking for our range to be put in place with an SMT. Right there. We had a 10 a.m. microcycle SMT. And so when this reaction off of that SMT, I saw that longs are potentially on the table. So I waited a little bit longer for fair value gap to be created. Right here is where I entered. Right there. So off of that, I created a standard deviation of our new 10 a.m. range. Saw that this SMT was in discount. We technically, we did sweep this low. I don't know why I keep saying technically. We swept this low, 10 a.m. microcycle. We are already respecting structure highly. This is a very low risk stop. If we take out these lows, then our YM 90 minute, no, it's not 90 minute hidden. I honestly didn't see a 90 minute today. So I honestly just took this off the fact that 10 a.m. PO3 to high, we have easy draw on liquidity high, all-time high, new daily opening gap unfilled, a high that we created for 30-minute PO3, 10 a.m. microcycle in the optimal trade entry in basically our direction of trend. We are respecting lows heavily. If we're not going to take these out, then we will reverse from here. So I took this trade. I was in there. Semi went down to our stop, almost like about, it was getting close. I was not worried, but I knew that we were in a good place for it to reverse before our stop because of this 15-second gap right here. If these 15-second gaps would remain open right here, I knew I was going to be okay. So we can see from CE, basically why I chose this was because there's a gap right here. This on the buy side, technically we could be using this because there's two gaps right there. That would be this supporting above, or we could use the bearish inversion, which they are both supporting above. So that was my confluence to hold for that. 15-second, I was in early. I didn't want to miss out on a large movement because this was pretty quick. I didn't want to miss out on the large movement because of my just, you know, being stingy and wanting a lower risk entry. No, so I entered, I had my risk set, and then we just held. Holding. What I'm looking at right now is 2-minute entries, right? I said I had that 2-minute. This 2-minute I wanted to see as a protected low for me to trail my stop at later. And you can see if we put on our standard deviation of where, or not standard deviation, our OTE of where we are during our retrace, which happened to be right here. I always want my stop to be at the 79 to 75 range if prices bounced above 50%, because wicking out is a major thing in bad volatile markets, even not even bad markets, but volatile markets right there. See, if we were in, let's just go off a replay so we can look at the executions. We were in right here. Stop, okay, sure, valid if you had like a 0 drawdown stop. That would have kind of been impulsive because we can trade back down into this. If you look on the 2-minute, we rebalanced this 2-minute. Look at the gap right here. This is a 2-minute gap in between there and right here. This is our fair value gap, and then we include this because of the gap. So wick down to the 2-minute again. I thought it was fine. Create a 2-minute SMTF off this. I knew that we were going to move higher because manipulation, if we're going to run, it should be around right here, 50, like in that last quarter of this microcycle, because it's going to roll into manipulation, and manipulation is definitely these two highs. And if you look, we're probably tapping into a 2-minute order block, possibly send us higher. 2-minute on ES is open, but I'm not holding. I just wanted to be out because we had a 1 to 4 and it was a great trade, and I'm going to wait for more to come. So anyway, I put a standard deviation of this trade because this was our clear retrace. At first, I did use it for this one, our initial 10 a.m. range, but I saw that this was a clear retrace. 0.25 is where I had my limit, or I think I took them off because I wanted to possibly take more money out of the market. But I decided to stop because I really didn't care. I want to wait for another day. So exit there, slightly lower because I was taking a few minutes to decide whether I wanted to hold or not, because one contract alone was like 250. So I just took it. 2-minute SMTF was a confirmation to hold. By that time, we moved and took out this high and the new daily opening gap. Our stops break even. So our first stop loss was 33 points, trailed to around 23, I think it was. Took off 10 points because it was safe to do so. And then after that, we went to break even. Now off of this, I was looking at possible 15-minute retraces into the range, also 15 or 5-minute and 15, because we have this 5 right here. Now let me tell you, I was going to hold this, and you know why? Because distribution is coming next. But the reason why I didn't was because distribution, looking on YM, and I know I shouldn't be looking at YM all the time, but looking at YM, I saw that we just had a lot of movement to go to down and rebalance price before we could move, like extend a lot higher off of all-time highs. So trading all-time highs was like, sure, I could hold it. Distribution day, we might just distribute in this distribution and then continue go higher, and I missed out on like however many 1,000 points Trump is gonna push into the market or whatever. But who cares? This was a great trade. This is what repeats, and we're gonna see this trade multiple times, all the time throughout the year. So this is what we want to master. Shit, I actually need to take a screenshot of this and put it in my data. But that's the trade we took. Little recap of how we saw it. On the 5-minute, you can just see how our day moved. It wasn't all that clean, but from the week, we had our weekly cycle, daily cycle right here. True day open, mitigated, looking for this 1 hour to support, looking to narrow down in the 15. At the 10 a.m., it was the right time for us to long, and we took this beautiful trade. So that's it. Thank you for watching. It was a long trade, and I'll see you in the next video. Peace out, guys.